You're listening to AI Prism from Seoul Economic Daily.
It's Monday, May 11. I'd like to share some thoughts about Front Page Daily. Imagine a company just, selling off its most consistently profitable business just to stay alive.
Or a car maker deciding to simply build its own power plants.
Right. Today, we are looking at this massive portfolio reshuffling happening across Seoul right now. From major conglomerates to, everyday homeowners, players are radically pivoting their assets.
Yeah, and the strategies they're using reveal a lot about where the global economy is actually heading.
Exactly. So let's start with Hyundai Motor Group's move at Saemangeum. That's that massive 400-square-kilometer reclaimed coastal industrial zone.
Right, down on the coast.
Yeah, by May 2026, they are finalizing an agreement with state-owned Korea Southeast Power to produce hydrogen there. But crucially, to use it for power generation.
Which is a big shift for them.
It is. So let's unpack this. Is this essentially a car maker, deciding to become a utility company because passenger EV sales are lagging?
Well, it's a massive hedge against an unpredictable consumer market. You really have to look at the concept of jisanjiso here. That's local production for local consumption.
Okay, so making it and using it right there.
Exactly. Hyundai isn't just manufacturing hydrogen to sell to drivers. They're designing a closed-loop system to power their own operations if, consumer demand falters.
Right. Think of it like a restaurant growing its own vegetables.
Yeah.
If nobody orders the salad like the passenger hydrogen cars, they don't just throw the veggies away.
No, they use them to feed their own staff. Or in Hyundai's case, they route that power to run their local AI data centers and robotics plants.
Wow. Okay. That makes sense.
It's a vital defensive play, really. Korea's power grid is under immense strain right now as the country competes with Japan and Taiwan for advanced manufacturing dominance.
So securing your own clean power isn't just about going green. It's guaranteeing your factories can actually stay open.
Spot on.
Okay, so Hyundai is hedging by building new infrastructure. But reshaping a portfolio isn't always about building, right? Sometimes it's about aggressively hacking off the old parts to survive.
Yeah, look at Kolong Group.
Right. They are selling off highly profitable semiconductor and display materials businesses, plus prime real estate. They want to raise 300 billion won, which is roughly 220 million US dollars.
But there is a reason for that. Kolong's holding company is sitting on a staggering debt-to-equity ratio of 332%.
Wait, 332%? That is well past the danger zone.
It is. So this isn't just a visionary pivot for the mid-size cable, a family-controlled conglomerate. It sounds more like a forced fire sale to keep afloat.
I mean, fourth-generation heir Lee Kyu-ho is leading this restructuring, and he's essentially sacrificing their legacy cash cows.
Right. To urgently fund new AI and biotech ventures. It's a high-stakes gamble to future-proof the family business before that debt burden just, crushes their ability to innovate at all.
That urgency to digitize and tap into new asset classes, it's bleeding straight into traditional finance, too. Like the Bitcoin Seoul 2026 conference happening June 4th and 5th.
Oh, at the FKI Tower in Uido, right.
Exactly. Hosting a Web3 event right inside the headquarters of a major business lobby in Seoul's financial heart. That sends a massive signal of institutional embrace.
Well, Seoul is aggressively positioning itself against Singapore and Hong Kong in the tokenization race. The global leaders gathering there, they aren't talking about retail crypto trading.
No, it's all about RWA, right? Real-world asset tokenization and stablecoins.
Exactly. Tokenizing a real-world asset like a commercial building or a bond means you can chop it into digital fractions.
And then trade it instantly on a blockchain. You completely bypass those days-long traditional banking settlement times.
Right. It fundamentally modernizes the payment layer. It makes illiquid assets instantly liquid, and that is the holy grail they're chasing.
But it's highly ironic, though.
How?
Well, while corporate and institutional assets are becoming more liquid, physical assets for the everyday Seoul resident are basically freezing solid.
Ah, right. The new property taxes.
Yes. The government just reinstated a punitive capital gains surcharge of up to 82.5% for multi-homeowners in overheated adjusted areas. Overnight, Seoul apartment listings dropped by 1,581.
The mechanics of that drop are fascinating because it hasn't triggered a price crash. Instead, it created a total trading vacuum.
Right, because if a tax eats up 82.5% of your profit, selling is mathematically irrational.
Exactly. Owners are just pulling their properties off the market entirely and holding tight.
But holding tight directly impacts the rental market. If landlords stop offering new units, those huge junsi deposits, Korea's unique lump sum deposit rental system, those listings dry up across the city.
Which leads to a severe unintended consequence. The supply of rental housing vanishes. Desperate tenants might be forced into actually buying homes in a heavily restricted, low-supply market.
Which ironically drives housing prices upward.
Precisely. A policy meant to cool speculation ends up doing the exact opposite by forcing renters to become buyers.
It really leaves you to ponder how rapid 5-year political policy cycles can instantly freeze market liquidity, right?
Right.
While at the exact same time, corporations are scrambling to alter their national investment strategies almost overnight.
It's a massive contrast.
That's today's AI Prism, Front Page Daily. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Juan Ifra award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.